This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the gold market. In the beginning of the current week and on Friday, market has shown at least some price action on the daily time frame that at least shows some more active move in the market, because previously we have seen this overlapping bars that market is calling inside of this flag pattern. But take a look what happened on Friday. Market is closed below the lower body of the consolidation, despite the fact that this trading session you could see was very tight. So in fact this is inside trading session for the previous bar. Still, that is significant move, because that could mean the breakout of the flag, and that could mean the move right to the 60-40 area, since we have in progress this ABC top pattern that give us the agreement with the 768 deep fib support. Also, from the classical standpoint, if you measure the mast of the flag and count it to the downside, the breakout point, you will get the same distance, the same target of this pattern. But what is more significant on the daily time frame is that probably now we also see the bearish dynamic pressure, because take a look at the price action on the most recent week. We have the shifting trend to the bullish side, okay, but bullish trend hasn't been supported by price action. You can see that market has shown lower highs, lower lows, so in fact this market creeps with this red line to the downside. So trend holds bullish, but price action is not. That is the dynamic pressure. The one moment is that too few bars with this pattern. I prefer to see the market shows a bit deeper and a bit longer in time, this moving against the trend. But this is just 4 bars in a row with this possible pattern. Still, this is a significant moment, I suppose, because if this is really the bearish dynamic pressure, market shows us that it probably will taken out of these lows. So this just another confirmation of the possible move to the downside. In general, I could say that in the short-term perspective, now market shows more signs of the potential move down than it was on the previous week. Hence, the risk for this potential move to the downside is returning back inside of the consolidation. So if this will appear to be the failure breakout of this consolidation of this flag pattern, market will return right back inside of it, especially if it will happen with some significant candle. Well, that could lead market high at minimum to the upper border of this consolidation of the flag. That is the risk for the potential move to the downside. But currently, and at least in the current chart, the situation looks like the market has intention to continue move to the lower, right to the 60-40. So if you have read our analysis of the gold market, you'll see that due to some moments and some statistical data, we could say that some hidden bullish pressure on the long-term perspective is growing on the gold market. And I suppose that this is just the question of time when the upward move will happen. That's why, from that perspective, if we will get the entry point around the 60-40, we will be very lucky. If market will show us a retracement to the 60-40 and will let us to enter long somewhere around this area, that will be just perfect. If we will enter by this ABCD pattern, we'll get this this 222 pattern, so that will be a very good possibility. On the 4-hour time frame, we see this ABCD pattern. Take a look, the trend has turned to the bearish side on the 4-hour time frame. I do not know will it be proper way to treat this action as the butterfly, because it's really very choppy price action and butterfly can't be identified absolutely clearly. Still, if we will measure the 127 extension of this swing, it stands precisely in the same area, around 60.40. That's also, I suppose, significant, so that in fact could be some sort of the butterfly pattern with this move to the downside. On the hourly time frame, don't forget about this bearish wedge that we have discussed on the 4-hour time frame on the previous week. Now we see that market has broken it right here, has retested the lower body and continue move to the downside. Hence, depending on your current view on the market, you could apply different tactics to possess yourself. If you're a scalp trader, you could try to enter on the short side of the market with the hope to reach the 60.40. If you still hold the position around 60.80 that we have opened on Thursday, right here, so you could still hold it. In the beginning of the week, as usual, we will pay attention to the weekly pivot point, since this is a significant level for any market pivot point, and it stands on the coming week right near the trade resistance of the most recent swing. So if market will show some pullback to this area or slightly higher, then probably it could be not a bad opportunity to enter on the short side of the market with the hope to reach the 60.40. If you are bullish, then you probably should either wait reaching of the 60.40 area or erasing the bearish short-term bearish context. This could happen, as I said, if market will return right back with fast move inside of the consolidation. If this will happen, then the risk that market will continue move right to the upper border to the 60, 90, 70 even area will increase. Until that will happen, I still think that market now stands in progress with the daily downward ABCD pattern, and hopefully we will reach the 60.40 area. And after that we could pass to the second stage of our long-term plan on the gold market.